Crypto trading bots, your new robot overlords. Maybe? What are these things, you ask? Crypto trading bots, they are software programs, not actual shiny robots that bring you tea, sadly. These programs trade digital money for you. We're talking Bitcoin, Ethereum, and yes, even Dogecoin. They exist entirely on the internet, these digital traders. They whisper sweet promises of making you rich, or at least slightly less poor. So how do these digital minions perform their magic? They connect directly to cryptocurrency exchanges. Think of these exchanges as enormous, bustling online marketplaces. The bot then uses your money to attempt to buy low and sell high. It can trade while you're asleep or watching cat videos. The allure is undeniable. The crypto market never closes. Ever. Bots, however, have no such needs. They can theoretically stare at complex charts and flashing numbers around the clock. Now let's try to understand how smart these crypto trading bots actually are. They operate based on algorithms. That's a rather fancy word, isn't it? It simply means a predefined set of rules or instructions. Think of it like a very specific recipe. But instead of baking a delicious cake, this recipe attempts to conjure up financial profits. These instructions meticulously tell the bot precisely when to buy a certain cryptocurrency, and just as importantly, when to sell it. What kind of information do these algorithms consume? They feast on market data, vast quantities of it. The bot diligently analyzes all this information. It searches for patterns, for signals, for any indication of where the price might go next. Automation is the real buzzword, the core selling point of these bots. You, the user, are meant to set it up initially. You choose a strategy or perhaps use a pre-packaged one. You allocate some funds, then you supposedly let it run free. Alright, let's consider the potential benefits. Because surely there must be some advantages to unleashing a robot on your crypto portfolio, right? First and foremost, time saving is a significant draw. Actively trading cryptocurrencies can be more than a full-time job. A trading bot can take over the tedious, time-consuming tasks. This, in theory, frees up your valuable time. Speed is another frequently touted advantage. The cryptocurrency market moves at an astonishing pace. Prices can surge dramatically or plummet disastrously in mere seconds. A well-programmed bot, however, can react almost instantaneously. Then there's the promise of emotionless trading. Human beings are by nature emotional creatures. Bots, being mere lines of code, don't experience feelings. They just rigidly follow their programmed instructions. And finally, of course, there is the potential for profit. This is the ultimate goal, isn't it? If you possess a genuinely sound trading strategy. Section 4. The downside, when bots go bad, and they can go very bad. Now we must turn to the less cheerful side of the coin, the risks. And believe me, when it comes to crypto trading bots, the risks are plentiful and substantial. Security is an enormous concern, right at the top of the list. You are essentially granting a piece of third-party software, the bot, direct access to your cryptocurrency exchange account. This means giving it permission to trade with your actual, real money. If the company that provides the bot or the platform it runs on gets hacked, guess what could happen? Your funds could vanish into the digital ether. Financial loss is another stark and very real possibility. It is crucial to understand that crypto trading bots are not magical, guaranteed profit-generating machines. They are far, far from it. Cryptocurrency markets are notoriously volatile. That's part of their dubious charm. A bot that is diligently following a poorly designed strategy, or a strategy that is simply unsuited to current market conditions, can lose your money with terrifying speed. Furthermore, there's the inherent dependence on the bot's programming. A trading bot is only as effective and reliable as the code that underpins it. And let's not forget the capricious nature of the market itself. Section 5. Real people, real bots, tales from the crypto trenches. So what are the experiences of actual human beings who have ventured into the world of crypto trading bots? If you browse online forums and social media, you'll find some users who report positive outcomes. They might share screenshots, allegedly of their accounts, showing small but consistent gains over time. They praise the reliability of their chosen bot and the convenience it offers. They claim it helps them to capitalize on market movements even while they sleep or work. These are the glowing testimonials, the success stories. Naturally, these are the narratives that bot developers and marketers love to amplify and showcase. However, for every cheerful success story, there are often less joyful tales. The horror stories. Accounts from individuals who have lost significant sums of money, sometimes their entire investment, or even more if they were trading with leverage. Stories of bots that malfunction spectacularly during periods of high market volatility, executing disastrous trades or freezing completely. Narratives of once profitable strategies that suddenly and inexplicably stopped working, leaving a trail of digital tears and considerably lighter crypto wallets. These cautionary tales are often quieter, less publicized, but they are undeniably out there, serving as stark warnings. A common pattern emerges from many user experiences. A particular bot, or a specific strategy, might work exceptionally well for a certain period. So, bots miracle workers or money munchers? Are crypto trading bots a scam or a pathway to success? The answer isn't simple. It's a murky, high-stakes, digital gray area. Think of crypto trading bots as tools. In skilled hands, they can be useful. In careless hands, they can cause harm.